Do. Another one bites the dust. That could be a recurring intro for stocks, for whatever. FDX, Fedex Corporation. I got an alert for that. I think I posted when it did that crazy down day, posted something on StockTwits or Twitter. Symbol info, New York Stock Exchange. I think it's a component of the Dow. Industrials, air freight, courier services. And I had fun overlaying FedEx with the S&P. Let's do it now. Compare S&P. Oh, look at that, man. That is insane. Let's put in a line graph. Line. Let's remove that 12-month moving average. And that has been following pretty much the SPX up and down. The SPX being a little more resilient. And when FedEx just did its big drop, I had posted that was that a leading indicator? Could FedEx be a leading indicator of worldwide demand through whatever their services are offering, freight overseas, wherever they do their thing? And I just drew a little line there saying that the SPX could be going down all the way there. And as long as FedEx didn't make a higher low on the monthly candle chart, that the bottom was not set for SPX. So once FedEx sets a bottom, then say, okay, it's making lower highs. SPX still going downwards, but the trend could be start reversing. Maybe the economy is picking up. Maybe worldwide demand is picking up. But those are theories. I know nothing. All I know pretty much is the price action, stage analysis, chart trading, and go by that, guys. But nothing wrong with knowing more of what's happening. It's part of the total weight of evidence. At the end of the day, yes, you do only play the chart, but you have to understand, and the more you understand, the more you have a weighted opinion, and when you take your decision, you have increased chances of it being more successful. All right, that's enough. All right, monthly defined, breakout, resistance, January. The high was done in January earlier this year and never able to overcome, so lower lows. And then we had a breakdown. Right here, we had a breakdown here of this monthly defined breakdown line. Below 12-month moving average. 12-month average was flat at that level. Bounce back up above. I don't really like when I have breakdowns and have wick below it. And the longer the wick, the more you know that the price action was down there during the month, but there's still a lot of buyers coming in. And on the weekly, on the daily, you probably see that they brought the price of the price action back up right there. And then sometimes you have just close to that breakdown line. It's still a breakdown, but when you, in the total weight of evidence, you want a Marubozu candle where there's almost no wick and it's a solid close below a breakdown line. Then you have full confidence that the sellers weren't there at all during the month to at least brag the price, give some weakness to that downwards pressure. Pullback the next month, see, and after that, gap up. And then that was the last gasp of air. And that crazy candle was at 32%. Currently in December, down 32%. Big red candle. We're going to zoom in on the weekly. We're going to check out other details as the volume, Ichimoku Cloud, where's FedEx. But this is just nasty, guys. So the implied measure move from that top pattern has been reached in that candle. You can't always play it. If that's my top pattern right here, it was reached like during the month. You went right through some more monthly defiant support right here. Previous resistance and support. That's a 5-6 months. That should have held more than that. And then you have the natural support right here. Drill down through that. And then you have just a little bit lower. You have that big breakout, that big pattern right here. A few years, right? Multi-year pattern. 1, 2, 3, 4, 6, 7, 8, 10, 11, 12. Yeah. And that breakout, that resistance is now turned support and just melted through that. So all those barriers melted. It didn't hold. You would expect usually a bounce off that. Maybe in December, maybe in the next few trading sessions, it's going to close back above that. But if it doesn't, now that support is turned resistance if you're below it, and pullbacks will have a hard time going back above these levels. So if ever we pull back on the monthly, if this holds, then it's going to go back down and test this natural support right here. And then you have multiple levels here of support turn resistance that it's going to block it if it goes through that. If they're weak, if the market decides that the market's strong enough to bring it back up here. But you're so far away from the 12-month average. The damage, a lot of damage done. So you need a lot of horsepower. Just like you want to enter stage 2 when it breaks out off a big base after consolidating for a long time on big volume. You need that energy for that price action to keep going up. So once you go down like that, unless something dramatic happens, you were doing QE 100 or I don't even know if that could help. But you need something dramatic to overcome this in one shot in a V-shaped recovery. When you go down like that, 12-month average going downwards, what's going to happen is more these scenarios, these pullbacks, and then the pressure. Okay, the rally's over. You're hitting that resistance, then going back down, hitting support, going back up, testing that support and resistance, going back down until that slows down. Hey, 12-month average starts flattening out, and then you're out. And that's when you enter a stage 1. And then you don't want to even enter there. You have to wait for that stage 1 to really digest all these sellers, all these people that got trapped here deciding, okay, I'm out. So they're not sellers that want to break even when you go back up. Because everybody that bought here, they're going to try or want to break even. And the only reason they're not going to manage to do that is if they give up along the way, capitulate or whatever. When they give up, then that's what's called a consolidation, accumulation, new buyers, and then you break out. So this could last years. And most of these, look at this bottom pattern, 2008 to 2014, or let's say that's stage 1, or 2009. Even here, it takes years to get that energy to go up there. So once you're up, you start going down, big red candles, 12-month average going downwards. You're not sure it's going to recuperate, guys. Just not sure. And let's say from those bottoms. So how far? So right now this has pulled back almost 50%. Fibonacci style. Then golden ratio bring us down here to these 2016 lows, 61.8%. And then full retrace would bring us all the way back down to 2009 lows, guys. Not there yet, but you see there's a lot of room. So if you want to do a full cycle, there's still a lot of vacuum down here, guys. All right. So the moves down on the monthly. You're far away from the 12-month average. You could expect maybe a pullback. But when you go down, there's fear that leads to panic. And those consolidations, like you see here, going upwards and hugging the moving average, upwards, hugging the 12-month average, they're less and less possible. Once that top breaks down and there's no more energy below it, gravity kind of takes over, and those pullbacks they really happen when everybody gave up, and then the stock could rebirth, relive, maybe. All right. Okay, these crazy lines, remove that. Remove that one. Remove that. Patrick, too many lines. Okay, last one. Before last one. I'm going to leave the monthly candle resistance or support, so we know where to expect bounces. 3-week average going downwards. I'm underperforming the SPX for a while, but not until this candle right here. This was the stage 4 at the beginning. Below the Ichimoku cloud, right here, and that's that monthly candle there that the price action came back up. But on the weekly, if you didn't wait for that monthly confirmation, price action went back down. Heavy red volume right here on these candles. Bad sign right here. Heavy red volume on those breakdown candles. Heavy red volume. And that's damage that has to be digested. So when you have those red candles going upwards, it's the beginning of a slowdown, or it needs a sideways move to digest that. But the more it happens, like gunshot, poof, shot once, twice, 3 times, and your chance of survival, if you didn't have the proper time to heal, well, they get worse and worse. Now the price action is around the 30-week moving average, stage 3, below it, starting to skew it downwards. Everything's starting to add up. Lower highs, lower highs, lower highs, lower lows, lower lows. And once you're out of the Ichimoku cloud, the 3-week average is declining. See the red highlight here, underperforming the SPX. Declining 30-week MA, below 30-week MA. And after that, it's stage 4 decline. Pullback, it would have been great entry right here. Pullback, never made it above 30-week average. Still below the Ichimoku cloud. Great entry right here. And after that, timber. Increasing red volume. Wow. Somebody's dumping. Well, I don't know. I'm saying that, but volume's definitely going down. We're getting away from that 30-week moving average. So now that's when I look at my monthly defined support. There's still a vacuum here. And maybe here we could have a little sideways move and then continue trend down. Or always have to envision both possibilities, that it busts above the 30-week average. That means you stop shorting, but you don't enter long. Not yet. You have to wait for that stage 1 to happen. You have to wait for that breakout, on high volume, etc. Overall market conditions. You don't want to be isolated in a breakout scenario where just a little bad news somewhere else and now it's time to sell. You want to put all chances on your side. So right now the best chances are playing stage 4 continuation shorts, but right now you're far away. So until you have a pullback and try to catch back up to that 30-week average, try to hug some support, now turn resistance. It's a no touch, guys. Very hard to play Fedex right now. It would have had to be played on top here, right here. This zone here, that's where you have to play it. Right now it's just free fall. Can't do anything with it. Let's see if this is really a leading indicator for SPX. If SPX is going to be dropping like that, following its suit, and I'll be keeping an eye on Fedex to see if it starts making higher lows, and if that could be a leading indicator to see if markets are turning around. Until then, see ya. And don't forget to subscribe, guys. Appreciate it. Ciao.